If you're thinking about buying an electric vehicle or you already drive one, you may have noticed something that feels a little bit counterintuitive. The car is quiet, it has fewer moving parts, it doesn't need oil changes, and day to day it often feels much simpler than a gas vehicle. And yet, when the insurance renewal shows up, the premium is often higher than expected. Got the same driver, same location, similar sized vehicle, just a different powertrain. The reason for that has very little to do with how often electric vehicles crash and a lot to do with what it costs to put them back together when something does happen. Insurance pricing is driven less by accident frequency and more by claim severity. Most drivers, regardless of what they drive, will never have a serious claim. Insurance exists to handle the situations where repairs or replacement are expensive, not because losses are expected. Once you look at electric vehicles through that lens, the pricing starts to make a little more sense. Let's walk through how that plays out in real life. You buy a new electric vehicle. Maybe it's a Tesla Model 3, a Rivian R1T, a Ford Mustang Mach-E, or another EV. You enjoy the instant acceleration, the quiet ride, and the lower fuel costs. A few weeks later, you compare insurance quotes and notice a jump compared to the gas sedan or SUV you drove before. What changed isn't you, it's the cost structure behind the vehicle. Electric vehicles are engineered very differently. The battery pack alone can represent a large portion of the vehicle's total value. It's mounted low in the chassis, integrated into the structure, and designed to absorb and distribute impact forces. That design improves handling and safety, but it also means the battery isn't a simple bolt-on component. In a low-speed collision, that might be mostly cosmetic on a gas vehicle, a bumper, a fender, some paint. An electric vehicle often requires additional steps. Insurers and repair facilities need to verify that the battery system hasn't been compromised, that high voltage components are functioning correctly, and that no hidden damage exists beneath the surface. Even when everything turns out fine, that verification process takes time, specialized equipment, and trained technicians, and those costs really add up quickly. This doesn't mean electric vehicles are fragile or unsafe. Many of them perform exceptionally well in crash testing. It simply means the process of confirming that they are safe to return to the road is more involved. Now think about a very ordinary situation. You're stopped at a red light. Someone bumps into you at low speed, no injuries, no major damage. On a gas vehicle, that may be a straightforward repair. Replace the bumper cover, repaint, move on. On an electric vehicle, the insurer has to consider whether the impact transferred force into the battery enclosure, whether the sensors were disturbed, and whether electronic systems need recalibration. Even if the final answer is everything checks out, the inspection and recalibration work can significantly increase the total claim cost. Across thousands of similar claims, those higher averages are reflected in premiums. Another contributor is parts and labor. Many electric vehicles use proprietary components, battery modules, coding systems, integrated electronics that are not interchangeable across brands. Repairs often require manufacturer-approved procedures and technicians who are specifically trained on electric drivetrains. That narrows the repair network and increases labor costs. In some regions, there are simply fewer shops equipped to handle EV repairs efficiently. When options are limited, prices tend to be higher, and repairs may take longer. Longer repair times also increase costs for rental vehicles, storage, and logistics, all of which are part of an insurance claim. Vehicle value is another major factor. Electric vehicles, particularly newer or higher trim models, often have higher replacement costs. Insurance coverage is tied to what it would cost to replace the vehicle if it's totaled. Even if tax credits, rebates, or incentives reduced what you personally paid, the insurer is still exposed to the full replacement value. Higher replacement value means higher potential payout. That alone increases comprehensive and collision premiums, regardless of how careful a driver you are. Technology also plays a role. Modern electric vehicles tend to include extensive driver assistance systems, cameras, radar units, sensors, large displays, and integrated software. These systems can reduce accidents in certain situations, which is a positive trend over time, but when they are damaged, repairs can be expensive. A windshield replacement is a good example. On many newer vehicles, the windshield houses cameras used for lane keeping, adaptive cruise control, and collision avoidance. Replacing the glass is only part of the job. The system often requires precise recalibration so those features function correctly. That additional work increases claim costs. Side mirrors, bumpers, and body panels often include sensors tied into the vehicle's safety systems. Repairs that once involved simple parts now require electronic testing and calibration. These are common repair scenarios on modern vehicles. Data maturity matters as well. Insurers rely on long-term loss data to price risk accurately. Gas vehicles benefit from decades of claims history across millions of vehicles. Electric vehicles, while growing quickly, still have a shorter track record. We've seen this before when hybrid vehicles first became common in the mid-2000s. Insurance premiums were higher relative to comparable gas cars. As repair processes standardized, parts became more available and claims data accumulated. Premiums gradually normalized. Over roughly a decade, those early hybrid pricing gaps narrowed as uncertainty declined. Electric vehicles are following a similar path. As data improves, pricing tends to become more precise. Total losses are another area where electric vehicles differ. Because repairs can escalate quickly, insurers may declare an electric vehicle a total loss at a lower damage threshold compared to a gas vehicle. This isn't because the accident was much more severe, it's because the cost to repair versus replace crosses that line sooner. Total losses are more expensive claims. When they occur frequently within a category of vehicles, that affects overall pricing. Location can amplify all of this. In dense urban areas, higher traffic volume increases the likelihood of minor collisions. In more spread out regions, towing distances, access to certified repair facilities, and limited shop availability can increase claim costs. Here in Nevada, that shows up in very practical ways with long stretches of highway, limited EV certified repair shops outside the Las Vegas metro area. Towing an electric vehicle to a qualified shop can easily add several $100s to a claim. During monsoon season, flash flooding can also complicate inspections and repairs, even when the damage itself is relatively minor. Those regional factors don't make losses more common, they make them more expensive when they do occur. Weather-related claims follow similar logic. Hail, flooding, other environmental losses don't care what powers the vehicle. But on an electric vehicle, water exposure or structural damage can require additional inspection and verification steps. These events remain uncommon, but they are still a part of the overall cost picture insurers account for. It's important to keep perspective. Higher insurance premiums do not mean electric vehicles are more dangerous. Safety ratings are strong across many EV models. This is not about fear or expectation, it's about dollars per claim and the complexity of modern vehicle design. If you're considering an electric vehicle, the right question isn't whether insurance is higher in isolation, it's whether the overall ownership picture makes sense for you. Lower fuel costs, reduced routine maintenance, and potential incentives can offset higher insurance premiums. For some drivers, the math works out very favorably. For others, it may be closer. Neither outcome is wrong. It's also important to compare like for like. Moving from an older paid-off gas vehicle to a new electric vehicle will almost always increase insurance, regardless of powertrain. When you compare an EV to a similarly priced gas luxury vehicle, the difference often narrows. Looking ahead, many of these cost pressures are likely to ease. Repair networks are expanding, technicians are gaining experience, parts availability is improving, and claims data continues to grow. Over time, that tends to bring more stability into pricing. Insurance prices are reflective, not predictive. They describe what has happened across large groups, not what will happen to you personally. Electric vehicles often cost more to insure because repairs, replacement values, and technological complexity drive higher claim costs. Once you understand that structure, the premiums stop feeling mysterious. If you find these kinds of explanations helpful, consider liking the video and subscribing. I focus on explaining insurance concepts clearly so you can make thoughtful decisions without unnecessary alarm. And if you already drive an electric vehicle, drop your electric vehicle insurance story in the comments. What surprised you the most? Thanks for watching, and I'll see you in the next one.